Gold broke $5,000 and closed the week above $5,000 for the first time ever in history. Bloomberg got caught spreading fake news that moved markets Thursday. Russia's central bank chief confirmed they're not considering dollar return. The entire story was fabricated. Meanwhile, China just banned gold and silver rehypothecation and off-exchange derivatives that could break the CL. If you want someone to tell you the system is fine and your dollars are safe, CNBC is free. But if you're ready to see how deep this goes, backed by data, settlement documents, and historical precedent, you're exactly where you need to be. Still here? Good. Current prices as I'm recording. Silver Western Spot $77, futures $77, Shanghai Spot $86, Shanghai futures $88, $9 premium holding, Gold Western Spot $5,040. And as of this week, gold has officially closed above $5,000 on the weekly chart for the first time in history. Check comics and Shanghai data yourself. Publicly posted, updated, continuously verifiable. And let's be clear for those who didn't grasp the post on X. I didn't say gold simply traded above 5,000 intraday. I said it closed the week above 5,000 for the first time ever. Not an hourly wick, not a flash spike. The weekly candle closed at a price level we have never seen before. Bloomberg published misleading headline yesterday that sparked massive volatility in gold and silver. Claimed Russia considering return to US dollar system. Russian central bank chief Elvira Nabiulina confirmed no involvement in any talks whatsoever. Zero. The entire narrative was fabricated. This is how fast macro headlines shake liquidity and short-term momentum. When mainstream media operates as propaganda outlet instead of news source, Russia made it unmistakably clear where Journey is headed, not back to dollar. The whole story was ridiculous to begin with. Las. Russia is not going to return to dollar. It was a lie. When central bank chief publicly confirms no involvement in talks that supposedly happened, that's not misreporting. That's market manipulation through fake news. Bloomberg spoofed gold and silver markets with fabricated Russia dollar story. Here's the data point that changes everything. China just announced new rules for non-SGE and SHFE off-exchange gold and silver trading. 4 critical enforcement actions. 1. Off-exchange, leveraged derivatives will no longer be tolerated. Leveraged paper longs of leveraged paper naked shorts done. 2. Physical gold and silver deliveries will be enforced. No more cash settlement games. 3. Off-exchange, fractional reserve gold and silver will be scrutinized. 4. Off-exchange gold and silver rehypothecation will not be tolerated. This breaks the cartel. When China bans rehypothecation and forces physical delivery on all off-exchange trading, that eliminates the paper multiplication mechanism banks use to suppress price. 1 ounce of physical gets rehypothecated 10 times, creating 10 paper claims. China just said that's over. Physical delivery enforced. Fractional reserves scrutinized. Leveraged derivatives banned. SHF inventory sits at just 11 million ounces, as China heads into Chinese New Year already passed. 126,000 ounces added to SHF Silver Vaults Friday, staving off default. Silver closed 89.17 on SHFE, 2.31 premium over SGE spot. Gold closed 504. That SHFE premium over SGE shows internal Chinese arbitrage, spread widening even within their own market structure. When Shanghai futures trades $2+ over Shanghai gold exchange spot, that's physical shortage stress within China itself. David Morgan just dropped absolute bombshell. The Silver Guru gave exclusive interview warnings U.S. government will stockpile silver, not speculation warning based on strategic analysis. Morgan explains why he believes silver bull market has around 1.5 years remaining during which we see majority of entire bull market gains. 90% of gains and 10% of time is the pattern Morgan's calling. When U.S. government stockpiles silver for strategic reserves, that's permanent bid from sovereign level demand that doesn't care about price, only about securing supply before it's unavailable. Here's why U.S. government stockpiling makes strategic sense. China produces only 13% of global silver, but controls 70% of world's refined silver supply. Mining is not the advantage. Processing is. Silver ore is economically useless without refinement. Refined silver required for advanced military systems and AI chips and high-performance electronics. No processed silver means no AI revolution and no modern warfare capability. U.S. desperately trying to achieve mineral and processing independence because China dominates refining infrastructure. Gold physical ETF holdings have yet to reach 2022 high. Think about that. Gold price 2022 was 1.9 thousand. Gold price now 5,000. While gold price went up almost 3 times, physical ETF holdings sold off. Almost no one except central banks is participating in gold trade. Retail and institutions selling ETF shares while price triples. Central banks stacking physical while everyone else liquidates paper exposure. We are early. When price triples and ETF holdings drop, that's not speculative mania. That's fundamental revaluation without crowd participation. U.S. government running one of the largest budget deficits in history. First 4 months of fiscal year 2026, U.S. budget gap reached $697 billion, third highest ever, running only below last year's record in 2021 post-crisis response. Government outlays hit $2.5 trillion, while revenues $1.8 trillion. Net interest alone rose to $346 billion, over $1 trillion annualized, up from $322 billion in 2025. Deficit at crisis levels before crisis even declared. Massive amount of U.S. debt coming due. $9.6 trillion of U.S. marketable government debt will mature over next 12 months, most ever in history. Double the number seen before 2020 crisis, when you have $9.66 trillion maturing in 12 months, while running $697 billion deficit in 4 months. That's refinancing risk meets fiscal crisis. Treasury has to roll $9.6 trillion and fund new deficits simultaneously. Silver trading 77, Western 86, Shanghai $9 premium, gold 540 Western. Shanghai premium on silver expanded from $7 to $9 over 3 days, while Western paper consolidates. SHFE inventory 11 million ounces total, with only 126,000 added Friday. China enforcing physical delivery, banning rehypothecation, scrutinizing fractional reserve. U.S. government preparing to stockpile, according to David Morgan analysis. Central banks stacking while ETF holdings decline despite price tripling. Bearish case because intellectual honesty matters. Gold 5,000 could pull back. Parabolic moves correct violently. Silver 77 hasn't reclaimed 81 resistance on hourly chart. Shanghai close for holiday creates 8-day manipulation. Window banks exploit historically. David Morgan's 1.5-year timeline could be wrong. U.S. government stockpiling is analysis, not confirmed policy yet. China's off-exchange rules could be circumvented or delayed in implementation. $9.6 trillion debt maturity could roll smoothly if demand materializes. Bloomberg fake news moved markets Thursday, but didn't break them. Russia denying dollar return doesn't force immediate dollar collapse. ETF holdings declining while price rises could reverse if retail piles in. Deficit $697 billion in 4 months is unsustainable, but government has sustained unsustainable for decades. This is financial warfare education, not investment advice. Markets can remain irrational longer than you can remain solvent. But here's the counter. Bloomberg caught fabricating Russia. Dollar story proves mainstream media operates as market manipulation tool, not news source. Russian central bank chief publicly confirmed no talks. The lie is documented. Gold broke 5,000 despite fake news attempt to crash it. China banning rehypothecation and enforcing physical delivery eliminates paper multiplication mechanism that suppressed metals for decades. SHF inventory 11 million ounces is nothing against Chinese industrial and investment demand. David Morgan warning U.S. government will stockpile silver alliance with strategic reality. China controls 70% refined silver. U.S. needs independence for AI and military applications. Physical delivery enforcement means paper games, ending in Chinese markets first. $9.6 trillion debt maturity next 12 months is unprecedented refinancing risk during deficit crisis. Gold ETF holdings declining, while price triples means we're early before retail and institutional participation begins. Central banks stacking physical while selling paper through ETF liquidation shows sophisticated players accumulating before crowd recognizes revaluation. U.S. budget deficit, third highest ever during supposed recovery, not crisis, proves fiscal situation. Terminal net interest, $1 trillion annualized means debt spiral accelerating, not stabilizing. Russia publicly rejecting dollar while China bans. Metal rehypothecation shows multipolar shift accelerating despite Western propaganda. What actually matters right now? Gold just printed its first ever weekly close above 5,000. Period. Bloomberg got caught red-handed fabricating the Russia dollar narrative. Central bank. Chief publicly confirmed zero involvement. China dropped the hammer on rehypothecation, banned leveraged off exchange derivatives, and is now forcing physical delivery across the board. No more cash settlement games, no more paper multiplication. SHF silver inventories sit at 11 million ounces total, just 126,000 ounces added Friday. Enough to avoid default, nothing more. David Morgan dropped the warning. U.S. government likely to stockpile silver. His call, 90% of bull market gains historically cluster into 10% of the time. We're entering that window. Next 1.5 years could define this cycle. Here's the strategic reality the establishment ignores. U.S. produces 13% of global silver. China controls 70% of global refining. Mining means nothing without processing. No refined silver means no AI chips, no advanced military systems, No energy transition? That's why the US has no choice but to secure physical supply. Price won't matter when availability dries up. Gold ETF holdings keep falling while price keeps climbing. Think about that. Only central banks are buying. Retail and institutions selling the whole way up. That's not euphoria. That's early stage revaluation happening under the radar. US deficit hit $697 billion in just 4 months, third largest in history. Net interest alone now running at $1 trillion annualized. And over the next 12 months, $9.6 trillion in US debt matures, double what rolled ahead of the 2020 crisis. That's not a refinancing challenge. That's a mathematical trap. Silver premium in Shanghai holds at $9. Western paper is still stuck at 77. SHF at 11 million ounces. China controls 70% refining. Physical delivery enforced. Rehypothecation finished. Bloomberg exposed. Russia done with dollar talks. Central banks accumulating. ETF holders exiting. Gold 5,000 weekly close. First time ever.